That's the word we got from Christine Lagarde of the ECB. Now, let's get perspective on this. And for that, we're looking at the big shifts taking place in the economic landscape of the world. The possibility of recession is looming large, thanks to the pandemic, thanks to the Russia-Ukraine war, inflation. There are these higher interest rates and the banking crisis that has followed in its wake. But now let's get a sense of this growing contribution from China and India, among others, perhaps taking over the mantle of economic drivers from the US and the West. To say, of course, will they increasingly challenge the supremacy of the US dollar? That remains to be seen. But how deep is this possible conflict between the two large blocs that the former IMF chief, the current president of the ECB, Christine Lagarde, is speaking of, the US bloc and the Chinese bloc? To do this, let's speak to former Foreign Secretary Kanwal Sibal is joining us, along with Bandhan Bank's Chief Economist, Siddharth Sanyal. Good evening, gentlemen. Thanks for joining us tonight. Siddharth Sanyal, tell us about the possibility of this growing conflict between two economic blocs, the Chinese and the US. Does it pose potential challenges to global growth?
Well, this is a very interesting and most pertinent topic in terms of long-term global economic prospects and rebalancing of economic power. Now, what we are seeing that till about a few years back, till about 15, 20 years back, we used to discuss a lot more actively about what can be the balance of power between US and the Eurozone. But now, rather than the Eurozone, and as was evident from Mrs. Lagarde's points also, the two poles are possibly US and China. Now, obviously, the powers are constantly changing. The distribution is constantly changing, ever evolving. COVID also created a lot of change in dynamics on a lot of aspects there. And it throws a lot of challenges globally, but at the same time, opportunities, at least to a set of countries or certain economic regions. India possibly comes somewhere in between, in the sense, in terms of political acceptability, India is possibly much more acceptable to most counterparts. We get to see some kind of a more democratic setup. In case of India, we see a lot of role of a thriving private sector in India. So all these things put India in some kind of an advantageous position in order to take benefit from this change in power dynamics in the global arena. But having said that, I would like to say that while from an India's point of view, it indicates some bit of perceptible improvement over a period of time, in terms of overall scheme of things of the global economy, India, it possibly will take quite a number of years to become really, really impactful anywhere in comparison to US or China.
Exactly what I was asking, Siddharth. I'm looking at this IMF projection, which shows that between 2023 and 2028, the biggest world economic growth contribution is going to come from China, which is above 22%. India's contribution is going to be around 13%, a little less than that, which will be still higher than that of the US. The American contribution is going to be 11.3%. So tell us about this scenario. The possibility of it emerging is at one level, but what's going to see this kind of rise? Of course, India will have a lot of catching up to do, perhaps because manufacturing needs that much more of a push. But how have we reached this scenario, according to you, Siddharth, that India is going to be even higher than the US? What are the factors that are going to lead up to this in the next 5 years as the IMF sees it?
No, that's a very interesting point that you flagged, Vikram, and I think you summarized it nicely. The long and short story of it is that in terms of the overall level, if I see in terms of the overall size of the economy, despite the strong growth we have ahead of us in the next few years, will still be significantly smaller compared to a China or the US. But at the same time, at this moment, the incremental growth or the delta, so to say, over the course of the next few years, in terms of the delta or the incremental growth, the contribution from this particular economy will be very, very significant. Now, the interesting part here is this is despite the current relatively a much smaller base in case of India compared to the other two giants. Despite that, if the incremental growth is so high, this is actually flagging a very spatial potential in this particular in this particular economy in the current global order.
Kanwal Sibal is now with us, and you heard what Siddharth Sanyal has to say. Now, India's manufacturing push has been in the slow lane for a while. We're trying to correct this with PLIs, with production-linked incentives, which is, of course, helping the likes of Apple's contract manufacturers like Foxconn, etc. And we are looking at Apple, and they're looking at a larger footprint in India with 2 stores coming up. That's the big story of the day. But Kanwal Sibal, does this also mean it's going to take that much longer to catch up with China as far as India's manufacturing push, which is just about starting? It's in its nascent stage now.
Obviously, I mean, common sense would say that, because China is far ahead of us. It is 5 times our size. It is still the manufacturing hub of the world. And there doesn't seem to be any real decoupling from China. Frankly, Europe, you've seen, is wooing China. Macron has been there. Now, German foreign minister has gone there. And the Europeans are making it very clear that they don't want any conflict with China over Taiwan, and they're distancing themselves from the United States. What does this mean? This means that they don't see an option at this stage to wean themselves away from the Chinese market. Then China is controlling some very critical raw materials. Well, electrical vehicles and certain critical raw materials and everything else. They've been thinking a lot about this in the past and have developed almost a monopoly position in many of these areas. And the Chinese are pretty confident that whatever the West might say, given the scenario that is unfolding, the West is not going to be able to de-link itself from China. Now, the other funny thing is that where they are de-linking themselves to an extent, moving to Vietnam or some other places, in the background of this is the fact that these countries are importing a lot from China. So what China is doing is now exporting through these countries to the West. And of course, we also have a problem with regard to rules of origin and everything else. Even with the UK, when we are negotiating this FTA, where we are talking about rules of origin because we don't want Chinese goods to come to us via the UK. So we have a lot of catching up to do, but it is very clear also, based on studies that I've made, given the headwinds the Chinese economy is facing because of their population problem and the slowing down of the economy in general, and some of the decisions that Xi Jinping has been taking, that we will be able to catch up. Whether we do it in 10 years or 15 years, it remains to be seen. If China today is $14 trillion economy or whatever, and we have not even yet reached 4 trillion, and we want to reach 5 trillion by 2025, and maybe by 2027, 2030, we may reach 8 trillion or 10 million. 10 trillion will still be much behind China. The other thing is that China...
Yes, there's no taking away from that, but also in this prediction, the IMF is expecting growth contributions from Brazil, Russia, India and China, the BRIC nations, to outpace the global contribution of G7 nations. Siddharth, how do you see the rearrangement of the economic and, of course, the political power blocks in that scenario? Because there are these tectonic shifts that are happening even as India and Russia are now planning to get into a free trade agreement, while the UK-India FTA that Kanwal Sibal is talking about, that FTA is a question mark at this point in time. It hasn't happened yet.
No, I think this is a very interesting development. This particular number of 40% that you mentioned is not a very surprising one, as you explained earlier, that 20% and 13% is really coming from the 2 Asian giants itself. And if you actually take some of the other BRIC nations, you can actually see a contribution of something like 40%. So that particular part is not really surprising at all. In the near to medium term, we are actually seeing the Western world is going through some kind of recessionary pressures, or will be facing more of recession pressures going ahead in the next say 2 to 4 years, say. So in this particular phase, again, the delta or the incremental growth will come significantly stronger in case of some of the emerging economies, particularly in case of the BRIC nations. But having said that, again, we need to be we need to be realistic in terms of our assessment of the overall size of the economies, even after 5 years down the line. Still, the China and US will be multi-X of these economies, or India for that matter. We have to accept that. Having said that, there are certain interesting aspects, and it's important for us to capture on that. While we understand, for example, we always have a comparison between India's manufacturing and China's. Possibly it's a very difficult battle for India to try to go and fight. Maybe in case of India's services part, and when we are talking about services, it's not necessarily only about certain segments like IT or some of the other services. It's a broader base of services where we see a lot of competitive advantage in case of India, and we should policy making should be focusing a lot more on that to try to narrow the gap to the extent possible.
Right. Let me take that across to the former Foreign Secretary, Kanwal Sibal. Sir, do you believe that we need to kind of change tack, because we have gone down the services route? I don't know whether we've kind of left that behind in this entire push towards manufacturing, but it's the truth. What Siddharth is pointing out, a scenario where inflation, the consequent rise in interest rates, they've damaged the edifice of some banks, both big and small. Recession fears loom large. So, in fact, for India to kind of change its growth story, do we need to rely on manufacturing, or do we need to do something else? What do you think?
Point, but before I answer that, I don't think the future growth is going to come from BRICS as such, because the South African economy is in serious trouble. Brazil economy is not doing well.
No, this is minus South Africa, sir. They're talking about
and
BRIC only, without South Africa.
Even BRIC, Brazil is not doing well. Russia is under sanctions. Their growth prospects are not very good. If they enter positive territory, it will be 1% or whatever. So the growth is going to come from China and India. Having said that, with regard to your other question, of course, if, as everybody agrees, we want to create employment for a rural population, especially, and advance the process of urbanization, which will require a lot of employment in the urban areas, there is no choice but to go in for manufacturing. This does not mean you have to neglect services, especially we have strength in this area. We have very trained manpower, and we are looking upon our skilled manpower as a huge resource going on, and they can service the global economy, especially in countries which are aging very fast. But that won't create the kind of employment that you want. Therefore, manufacturing is a necessity. Other than that, in terms of self-reliance in the Atmanirbhar stuff, we can't really be independent if we don't have basic manufacturing in the country. Why is the United States trying to go back to manufacturing, if one may ask? Because they've realized that their power has declined, their economy is in trouble, because they allowed manufacturing to shift out of their country to places like China. And they now have passed all these new acts and this and that, especially in critical areas, to bring back manufacturing into the United States. I think there's a lesson in this for us. We have to do that. We do the same, especially in areas which will be very critical for future growth, whether it is the semiconductor industry or all the industries we have listed in the PLI scheme. So I think we have no choice but to focus on manufacturing, and that will give us the kind of surpluses that we want, the revenue surpluses, to build up not only our economy in general, but also our defense capabilities. Manufacturing in defense is extremely important. With high technology, a lot of investments are needed, a lot of our R&D is needed.
Yes.
And that will be the ultimate source of our real strength and our capacity to protect our strategic autonomy and work independently as much as possible on the global stage. Yeah. So I don't see a kind of a bargain between the services and manufacturing.
All right, fair enough. So then you're saying that we are on the right track, but considering this kind of growth story that the IMF is projecting, it's also talking about the strength of the US dollar and the possible weakening of it going ahead. So as far as the currency wars are concerned, the currency of choice that the world would trade in, Siddharth, do you see big shifts happening over there? Because even right now, between Russia and India, we're talking about the Indian rupee and the ruble trade getting done in these currencies. Are we likely to see more FTAs where the Indian rupee is going to be the currency of choice? Do you see that happening? And how much of that is going to come at the cost of the US dollar, which is clearly seeming to be on a decline?
Well, India becoming, coming close to US dollar is a very, very strong statement, and I don't see it happening dramatically anytime soon. So, in terms of the global financial order, does one expect the supremacy of dollar to decline dramatically, and some of the other currencies like say, for example, to some extent INR take that particular place? Clearly no. Having said that, while it's not dramatically impacting the global economic order, from an India point of view, the share of trade India had so far been doing in INR, and compared to that, say, a 5 year down the line, what share India might be achieving, that can be significantly different. And from our point of view, that can provide a very significant cushion for managing the current account deficit, or in terms of the strength or the volatility, or rather lack of volatility for the domestic currency. That might happen very clearly. So basically what is happening is, at some point of time, till about 20 years back, the expectation was that it's only euro which will be taking a significant share away from US dollar in terms of the global hard currency. To some extent, there will be some nibbling by some of the other currencies, including India's. From an India point of view, that might be significant, even if it doesn't change the global order dramatically anytime soon.
Yes, indeed. But the big headline from what the IMF is projecting is that India is going to lead global growth. China is, of course, leaps and bounds ahead. We have a lot of catching up to do. That's what the experts are indicating. And sticking to the manufacturing route that India is now embarking on after much delay, perhaps is the story, but services cannot be neglected. That's what we are getting from our experts joining us on the show. Ever grateful for your time, Kanwal Sibal and Siddharth Sanyal. Many thanks for joining us on this edition of India Tonight. Time for us to take a quick break, after which we talk about the major heatwave conditions across the country. High temperatures over the next few days is what we can expect, and this before the weather actually cools down. It's what we're getting from the Indian Meteorological Department. More on that and other stories in a flash. Do stay with us.
Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Motor market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now.
Hi, I'm Carrier. I carry the cool. Here's what is new about me. I got smart energy display for, match days, happy fam day,
will die.
Kinda socializing day, me time.
Best day.
The Insta Cool Tech. Named Carrier, I carry the cool so that you can chill.
India's preeminent political leaders are raising a toast to the orchestrators of change in India Inc. An evening of triumph and achievement where the captains of India Inc. salute the winners of the most revered corporate awards in the country. Deloitte presents the Economic Times Awards for Corporate Excellence. Live on 28 April 5:15 p.m. onwards, exclusively on ET Now.
Back with us on this edition of India Tonight, clarifying on news agency reports, I should say. The Finance Ministry sources that we've been speaking to earlier on ET Now have told us that there was no discussion on capital gains tax within the Finance Ministry, and the Ministry itself has denied any discussion on capital gains tax. calling these media reports baseless. Now, Income Tax Department has also clarified this. The Income Tax Department has tweeted that there is no proposal before the government on capital gains tax, and that's the latest on the issue. Meanwhile, we've been talking about Denis Manturov, who's Russia's Deputy Prime Minister and the country's Trade Minister, who is in India now. He's met the External Affairs Minister S. Jaishankar and also the Finance Minister Nirmala Sitharaman. Manturov is saying that Russia wants a free trade agreement with India to protect and promote investments. India's imports from Russia, those have hit a whopping $42 billion between April 2022 and February 2023. No wonder the Minister, Jaishankar, has also mentioned these concerns about trade imbalances. More importantly, India and Russia also want to encourage trade in rupee and ruble. The world is clearly taking note. Listen in to what we got from the chief of the ECB.
Both sides have to benefit. Otherwise, the FTA is not going to get signed. So the presumption is that in an FTA, both sides would try to protect their own interests and try to further their interests, but not at the cost of the other partner. So my reading would be that an FTA would benefit both. At the moment, the India-Russia trade is amongst the 5 top trade relations which India has. The US, China, European Union, the UAE and Russia. These are the 5 largest trade partners of India. Now, it has become slightly unbalanced because of huge imports of oil in the last year or 2 years. The trade in 2022-23 was about 46.33 billion US dollars, whereas that is the Indian imports from Russia, and Indian exports to Russia were only roughly about $3 billion. So there was a disproportion of about 15:1 between exports and imports. Now this is sought to be balanced through an FTA. Well, one of the important components which the Russian minister has indicated is bilateral investments. And he appears to have been very keen that the bilateral investment treaty, which could be a part of an FTA, but could also be signed separately, should be negotiated as soon as possible.
Well, that wasn't the ECB chief, but certainly Jayant Das Gupta, who I spoke to earlier, who's a representative of India at the WTO, and his impressions on this.